Good evening, everybody, and welcome to Market Pulse session. My name is Edwin, and I'll be standing in for my colleague, Rufus. So we shall start with looking at the activities that have shaped the day. So we shall look at fundamentals. Then towards the end of the session, we look at a few charts where we've had technical setups forming. So welcome. So on my screen, I've shared the calendar for the day. So ideally, we've not had quite a busy day. We've had very few key economic data. So in the morning, we had Reserve Bank of Australia meeting minutes. So the Reserve Bank of Australia monetary policy meeting details the record of banks' most recent policy setting. And basically what they try to discuss is the kind of policy that they would adopt going forward. And in that meeting, depending on the sentiments that are shared, or depending on how investors and traders interpret the tone of the meeting, then it can form the way traders would react out of how they would interpret that meeting. So if there are any sentiments which favor a possibility of raising interest rates, then at the end of that meeting, or towards the end of that meeting, you might have a significant bullish performance of Australian dollar against its crosses. And the opposite is true. If there are any dovish comments to the effect that there might be a potential hike of the rate, then you're likely to have Australian dollar weakening as the meeting happens or towards the end of that meeting. So when they met today, there are various decisions which were made. So the inflation, Australian inflation has been quite high in the recent months. And earlier in the month, or when they met early in the month to decide on the rate, they basically retained a 3.6% rate. And in that meeting, or out of that decision, they had also projected a possibility of raising the rate one more time. So the board today decided not to increase the rate. However, they're basically playing a wait and see to decide whether they're going to do so based on a number of issues. So they agreed that there is a strong case to pause and reassess the situation and see whether there is need for further tightening of the rate. And towards this end, the board therefore decided to keenly assess how inflation data and how the jobs data, as well as consumer spending and business conditions, are going to play out going forward in the coming month. Though the labor market has had loosened a little bit, they communicated that the numbers are still quite healthy. Then the next item was Chinese gross domestic product year on year. So gross domestic product is a metric that measures an annualized change in inflation adjusted goods and services produced within the economy. So this is one of the broadest measures to gauge how the economic activity has been. And it's a primary indicator to gauge how healthy the economy is. So when you have a high reading of GDP, in most cases, you're likely to have the currency. So in this case, we would have Australian dollar gaining strength against its crosses. And if the opposite is true, you're likely to have Australian dollar weakening. Now, this is the case because Australian dollar does a lot of business with China. So China is one of its main economic partners or business partners because they are located within the same geographical zone. So the Chinese economy, or when that data was posted, it reflected that the Chinese economy has advanced, or there was great improvement on GDP as it rose by 4.5% year on year in the first quarter of 2023. And this was a rise compared to the previous reading, which was a 2.9% growth for quarter 4 of 2022. The estimates for the same was 4%. So it actually exceeded the expectation by 0.5%. This was said to be the strongest pace in the growth of Chinese economy since the first quarter of 2022. And this was attributed to Beijing's effort to spur economic growth after the pandemic. Now, when it came to retail sales, there was growth at a near 2-year high in March, and the industrial output also rose quite well. It surpassed the performance of the last 5 months, and the number of jobs created also have risen. Actually, they rose to the highest rate compared to the last 7 months. Now, before that, there was data which had been released, and it was alluding that the exports from China unexpectedly rose last month due to the efforts to grow the trade further with the developed countries as well as emerging economies. So China has been aggressively looking for new geographical zones to grow their market. Now, that said, there were fears that the statistics agency allayed that though growth seems to be, though there seems to have been growth within the first quarter of 2023, it might be still, it might still be quite early to state. It might be still early to state with certainty that this growth is likely to be sustained. When it came to the China industrial production year on year, the industrial production increased by 3.9% year on year in March. And this was faster compared to the growth which was posted for the month of January and February. So in January and February, the growth was 2.4%. And the expectation for that was 4% for the month of March. And that was attained marginally because what was posted was a 3.9% growth year on year. Then besides Chinese data, we also had UK average earnings index plus bonus. So this data tends to measure the average earnings or the changes in average earnings in the price of businesses and government labor. So it measures the salaries of both private sector and public sector, including the bonuses. So the average earnings figure gives a good indication of how personal income has grown within a specific period. So when there's a higher reading, in most cases, you'd have the currency in question strengthening. And when there's a lower than expected reading, you'd obviously have that currency weakening. So the average weekly earnings in the UK, including bonuses, rose marginally to 5.9% year on year, to an amount to around 638 pounds in the last 3 months to February 2023. This was the same figure as January's and above the market forecast. So they were projecting a 5.1% increase, but what was posted was around 5.9%. At the same time, the regular pay, which tends to exclude bonus payments, also went up by 6.6%, where the average salary would be around 596 pounds. Then the average regular pay growth for the private sector was around 6.9% and 5.3% for the public sector. The finance and business services sectors are the ones which posted the highest growth. So they posted a growth of 8.3%, while construction sector posted a growth of 6.2%. Meanwhile, the total pay fell by 3% due to inflation. So inflation has, of course, been on the rise in most economies. And this was the biggest drop since 2009. So the regular pay went down by around 2.3%. Then the other data was UK claimant count change for March. So this data measures the change in the number of unemployed people in the UK during a specific month. So this was the previous month. So a rising trend would tend to indicate weakness in the labor market, which tends to have a trickle-down effect on consumer spending and economic growth. When there is a higher than expected reading, that negatively affects the currency, because if the claims, of the number of people who are making claims are increasing, then it shows that most people have either lost jobs or the economy is contracting and jobs are not being created. A lower than expected reading, on the other hand, would of course indicate a growing economy or a case where more people are getting jobs. So the number of people claiming for unemployment benefits in the UK increased by around 28,200 people in the month of March, the first increase in the 3 months and the biggest since February 2021. So that shows that the economy has not been doing quite well when it comes to job creation. Then the last data was the German economic sentiment. So this data basically tries to gauge a 6-month economic outlook regarding the economy. So a reading above 0 tends to indicate optimism, while a reading below that would indicate pessimism regarding the performance of the economy going forward. So this reading is compiled after conducting a survey among 350 German institutional investors and analysts. So a higher than expected reading in most cases would tend to cause euro to strengthen, and a lower than expected reading would in most cases cause euro to weaken against its peers. So the economic sentiment index in Germany fell short of expectations for the second month to 4.1. In the month of April, the lowest so far this year, from 13, which was the reading for the month of March. And this was well below the market forecast. So the expectation was to have a reading of 15.3, but it dropped quite low to 4.1%. So that was the reading for the economic sentiment for the European zone. So looking at the general performance of various currencies against United States dollar, Australian dollar and New Zealand dollar have predominantly performed well relative to the other currencies, possibly due to the fact that there was a good posting for the Chinese GDP data. Remember that these two economies are their core. The country with which they conduct a lot of business is China. So when China is doing quite well, in most cases, you'd notice a good performance on Australian dollar and New Zealand dollar crosses. So jumping into the charts, on the technical side, there are several charts for few crosses where we've identified several chart patterns. So at the moment, we have a formation of a triangular structure on 4-hourly charts, on Euro Canadian dollar. So I'm just trying to pull my MT4. So on 4-hour chart, we have a formation of a triangular structure. So when you have such a pattern forming, it's critical for the trader to track that asset as the price zeroes in towards the apex of that triangle. So in most cases, you're likely to have a price breaking on either side. So at the moment, a price is currently retesting the support of that triangle. So the possibility would be either to have price continuing to rise further up, to retest the upper trend line. So in most cases, you're likely to have price testing around 1.4750 to around 1.4770 area. If that does not happen, if the price loses the bullish momentum, then it's likely to break this trend line. And the first level that price is likely to retest is the previous low, which is around 1.4500 area. Then the other asset which seems to have formed an interesting setup is Euro Aussie. So this pair has formed a wedge, a rising wedge on a 4-hourly chart. So within the last few months, since mid-January, this pair has been on a progressive bullish momentum. So at the moment, a price has dropped towards the lower zone of that rising channel, rising wedge. So it's currently retesting support. So it would be critical for you to closely watch the performance of this pair, because two things can happen. If it happens that a price will regain a bullish momentum, there's a high possibility that price might rise to retest the upper trend line. So in this case, we would be looking to have price rising to retest 1.6500 area. So that's around 200 pips to the upside. If it fails to sustain the bullish momentum, should it break the lower trend line, then the most feasible area to retest would be this previous higher low, which is around 1.6050 zone. So this is around 250 pips to the downside. Then the next pair is Euro Kiwi. Again, here we have a rising wedge. Price seems to be on the lower side of that wedge. So again here, since we've clearly defined the path along which price seems to be, to oscillate within, should price regain buying momentum from the current level, there's a possibility that it might rise to retest the 1.7800 zone. So this is around 160 pips to the upside. If that fails and it happens to break below that trend line, then the most possible area to have price coming back towards would be the 1.7500 area. So 1.7500 would be the most feasible price level to have retested. So this is around 130 to 140 pips to the downside. Then lastly, we have Euro Pound. Euro Pound also seems to form a triangle on a 4-hourly chart. So at the moment, price is retesting the upper trend line of the wedge of the triangle. So it seems as though price is leaning more towards dropping to retest this area, which has served as support. So the area is around 0.825 area. So this is the level where price is likely to come back to retest this support if it's to sustain that bearish momentum. However, if that fails, then there's a possibility to break this trend line. And once it breaks the trend line, the next level that price might retest is this area of 0.8925. So that's roughly around 110 pips to the upside. So basically, those are the few charts where we've had setups forming. So Kevin, so if you've forgotten access to your account, Kevin Mundia, kindly get in touch with us. Go to our website, just go to www.fxpesa.com and look for the office number and get in touch with us to have one of our account managers getting back to you to instruct you on how to get access to your account. So with that, we come to the end of today's session, and we are glad that you could be able to join us. So we look forward to having you next tomorrow at around 8 p.m. So we will have a session tomorrow with Samson and Robert. Otherwise, see you all on Thursday.